Welcome back to Voice of Africa, your go-to channel for in-depth analysis and insights on international diplomatic events and geopolitical dynamics. Today, we're diving into a groundbreaking topic that could reshape the global financial landscape: the potential introduction of a unified BRICS currency. This concept, backed by the economic might of Brazil, Russia, India, China, and South Africa, aims to challenge the dominance of the US dollar and transform global finance as we know it. Before we delve into the potential impact of a BRICS currency, let's take a step back and understand the origins and significance of BRICS itself. The acronym BRICS stands for Brazil, Russia, India, China, and South Africa, 5 major emerging economies that have joined forces to promote mutual economic growth, political cooperation, and cultural understanding. Originally coined as BRIC in 2001 by a Goldman Sachs economist to represent Brazil, Russia, India, and China, the group expanded in 2010 to include South Africa, thus forming BRICS. These nations collectively account for nearly 40% of the world's population and cover a quarter of the Earth's land area. Over the past 2 decades, their economies have seen rapid development, significantly increasing their global influence. The idea behind BRICS was not only to foster economic growth among its members, but also to create a platform for political cooperation and cultural exchange. Now let's explore the central theme of today's discussion: the BRICS currency. The idea of a unified BRICS currency is more than just a financial experiment. It represents a potential shift in global power dynamics. The main goal is to decrease reliance on the US dollar, which currently serves as the world's primary reserve currency and is used in approximately 88% of global transactions. This heavy dependence on the dollar can create economic uncertainties for other nations, especially during periods of American economic instability. A BRICS currency could stimulate economic cooperation among member nations by streamlining trade and investment. By eliminating the need for currency exchange, member countries could bypass the associated costs and risks, making trade more efficient and predictable. This could foster stronger economic ties within the BRICS bloc and attract more international investment, thereby catalyzing collective economic expansion. The potential benefits of a BRICS currency extend beyond cost savings and streamlined trade. A unified currency would give BRICS countries collective bargaining power in international trade negotiations, leading to more favorable trade agreements and boosting the economic growth of member countries. Additionally, it could provide a significant counterweight to the dominance of the US dollar in global trade, giving BRICS nations more control over their economic destiny. For the globe-trotting traveler, a unified BRICS currency could simplify journeys to Brazil, Russia, India, China, or South Africa. Imagine not having to navigate multiple exchange rates and fees or carry different types of cash. One currency could make travel within these countries as seamless as a road trip across the United States or a train ride through Europe. However, creating a unified BRICS currency is not without its challenges. One significant hurdle is the economic disparity between member nations. For instance, the GDP per capita of India is significantly lower than that of Russia or China. These variances could make it difficult to implement a one-size-fits-all monetary policy. Political disagreements could also pose a challenge. The BRICS nations represent a diverse range of political systems and ideologies. Finding common ground on monetary policy could prove difficult given these differences. Additionally, the logistics of implementation would be monumental. Creating a new currency would require massive infrastructure changes, from updating financial systems and ATM networks to retraining banking staff and educating the public. Substantial cooperation and coordination among member countries would be essential, which could be a tall order given the geopolitical complexities involved. The introduction of a BRICS currency would undoubtedly send ripples through the global economy. Major economic powerhouses like the United States and the European Union would closely monitor this development. The US, with its dollar currently sitting atop the world currency throne, might see this new currency as a direct threat to its financial hegemony, potentially leading to diplomatic negotiations or economic countermeasures. The European Union, with its diverse economic landscape, might see an opportunity to foster new trade relationships while also facing the challenge of navigating complex political waters. Other major economies could react in varied ways. Countries with strong ties to BRICS nations might welcome the new currency as a pathway to bolstering their own economic relationships, while those allied more closely with the U.S. could view it with skepticism or even hostility. If you're finding this discussion intriguing, make sure to hit the like button, leave a comment with your thoughts, and subscribe to Voice of Africa for more insights into international diplomatic events and geopolitical dynamics. Your engagement helps us bring you more content that matters. The success of a BRICS currency could also be significantly influenced by technological advancements. Blockchain technology, with its decentralized and secure nature, offers a promising platform for a unified BRICS currency. It could facilitate secure transactions, maintain accurate records, and offer transparency to all member nations. This could be a game changer in reducing the risks associated with currency exchanges and fostering trust among BRICS nations. Digital currencies are already disrupting the way we perceive and use money. By digitizing the BRICS currency, many traditional banking hurdles could be bypassed, reducing costs and increasing efficiency. It could also offer an inclusive financial system, reaching out to those who are currently unbanked or underbanked in these nations. Financial technology, or fintech, has been making waves in the financial sector for a while now. From mobile payments to robo-advisors, fintech innovations are changing how we manage and spend our money. A BRICS digital currency could leverage these advancements to streamline transactions, making them faster, cheaper, and more convenient. A crucial aspect of introducing a new currency is ensuring it integrates well with existing financial systems. The Eurozone, despite its challenges, has managed to maintain a unified currency for years, facilitated by robust financial systems and regulations. The BRICS nations could learn from this, adapting best practices and avoiding potential pitfalls. Such a currency would not exist in isolation. It would interact with other currencies and therefore must be designed to be compatible with existing financial systems. This would require careful planning, collaboration, and the adoption of interoperable standards. So what does this mean for you and me? A BRICS currency could have significant implications for individuals worldwide. For the global traveler, it could simplify journeys by eliminating the need for multiple currencies. For businesses, especially those trading with BRICS nations, currency risks could be significantly reduced, leading to more predictable and stable trading conditions. For investors, a new BRICS currency could offer an enticing proposition. With the potential for increased economic stability within BRICS nations, investments in these countries could become more attractive, leading to a surge of foreign investment and creating new wealth generation opportunities. The introduction of a BRICS currency could also bring about shifts in global market dynamics that could affect the prices of goods and services. Depending on the strength of the new currency, imported products from BRICS countries might become cheaper or more expensive, affecting everything from the cost of your morning coffee to the price tag on your next car. The future of a BRICS currency is a hot topic of debate among economists and policymakers. In the short term, the establishment of a BRICS currency could stimulate economic activity within the member nations. It might reduce currency exchange risks and foster stronger economic ties, creating a more predictable and stable trading environment. This could lead to a surge in intra-BRICS trade and possibly even attract non-BRICS nations eager to capitalize on this new economic dynamo. Over the long term, the BRICS currency could become a formidable global player, challenging the dominance of the US dollar and reshaping economic alliances worldwide. As the currency gains traction, it could serve as a catalyst for a broader realignment of global economic power. However, the success of a BRICS currency will not be without its hurdles. Economic disparities between member nations, political disagreements, and logistical challenges of implementation could pose significant obstacles. The path to a unified currency will require not just economic cohesion, but also political will and technological innovation. What do you think about the potential of a BRICS currency? Do you believe it could reshape the global financial landscape? Or do you foresee significant challenges that could hinder its success? We'd love to hear your insights and opinions. Share your thoughts in the comments below, and let's continue this fascinating discussion. Make sure to subscribe to Voice of Africa for more in-depth analysis and insights into international diplomatic events and geopolitical dynamics. Your engagement helps us bring you more content that matters. Until next time, keep looking forward and stay informed.